Let's drill down on China, the potential changes to the investment landscape next year. Joining me now is Brendan Ahern, who's the Chief Investment Officer of KraneShares, the KraneShares China Internet ETFs, KWEB climbing nearly 18% this year, despite challenges from tariffs and that trade uncertainty. Both of those, Brendan, I just was talking about with Seema. First of all, are you surprised at the resilience of China trade given the ratcheting up of tariff pressure?
No, because I think China's really moved away from the U.S. as its primary export destination. You know, its largest trade partner today is ASEAN. It's not the EU. It's not the U.S. So China's a big part of the Asian economic GDP, of the growth of trade. So it's really a lot of these tariffs have really, to Seema's point, it's really pushed a lot of those goods into other parts of the world, particularly in Asia.
When you're looking at the health of the Chinese consumer, how much of that is linked to stimulus by the Chinese government, and how much of it is because there are new opportunities for the Chinese middle class?
Yeah, I mean, certainly, Contessa, having been in Macau myself last year, or earlier this year, you were just overwhelmed by the number of Chinese tourists in Macau and how crowded those casinos were. So the Chinese consumer has money. It's just getting it out of their proverbial wallet or purse. That the housing crisis, where upwards of 2/3 of Chinese urban household wealth is invested in, you've seen these big declines. So the issue is, how does the government stimulate, incentivize those consumers to actually spend money? And that's where we've seen consumer subsidies. You're seeing a lot of the Chinese EV stocks, the ADRs, rallying today because they announced that they're actually going to extend those auto and EV consumption incentives, and we expect very similar around electronics and home appliances as we saw in 2025.